Howdy, folks. Welcome to Liberty Call. Today is Monday, May 6th, 2024. Hope you're having a fantastical day out there. It's been 2 weeks since my surgery, and I'm still sore. I mean, on my right side, just aches, and I can't stretch my back because I don't want to pop anything internally. So it's like, horrible, but I'm surviving. Anyways, like I said, hope you're having a good day. It is kind of overcast here in Colorado, a little on the chilly side. I mean, I'm wearing shorts, but if I go outside, I got to put a coat on because it's a little, I mean, this is pretty thin. This is summer wear. So anyways, like I said, hope you had a good weekend. And if it is your first time watching Liberty Call, for you, yes, you, and you, if you could do me a favor, you could give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. Because again, I say smart things once or twice a week. So you got to tune in every day, just, on the off chance I say something smart. It could be today. I can't count on it, unfortunately. So, all right. Well, let's go ahead and jump into today's numbers and see how the markets did. So certainly not as jovial as they were last week, but or happy. But starting out with the Dow Jones, it was up 0.46%, 176 points. Closed at 38,852. The S&P 500 up 1.02%. Closed at 5180. NASDAQ up 1.19%. Closed at 16,349. I mean, we have a couple days where the Fed is kind of waffling. We get a few reports showing that the economy's slowing down, and everybody's thinking, oh, the Fed's going to go ahead and start cutting rates. The market needs to take off again. Again, be careful, folks. You might get kicked in the balls pretty hard. The VIX is currently sitting at 1349. It doesn't show a percentage change for today. Let's see. Canada up 1.42%. Brazil down 0.04%. And Mexico up 0.29%. Our European friends over in Germany, they were up 0.95%. The UK up 0.51%. France up 0.49%. Netherlands up 0.42%. Spain up 0.58%. Italy up 1.06%. Switzerland up 0.49%. And Portugal up 0.06. Russian exchanges were split today. The MOEX down 0.16. The RTSI up 0.18. And the Asian markets, looks like the Nikkei was closed. Last day it was open shows the second. Australia was up 0.7%. New Zealand was down 0.56%. In China, the Shanghai was up 1.16%. Shenzhen Component up 2% flat. China A50 up 1.5%. DJ Shanghai up 1.42%. Hang Seng up 0.55%. And the Taiwan weighted has been closed since the 3rd. All right. So that is the markets for today. Not too bad. Again, everyone's in a good mood. I really don't know why. I mean, there's plenty of, ugliness when you look at the report. Inverted yield curve going back to 22. What else? Consumer spending is still fairly strong, but like I said, I said this a lot of times. You don't get the same Cheerios for the same dollar. And I'm not that I eat Cheerios; they're disgusting, but you know what I mean. All right, let's go ahead and get into the weekly economic update for the week. Stocks notched a solid gain last week, rallying behind upbeat earnings and a dovish Fed and mixed economic data. Markets began the week with an upward bump as positive news from some mega cap tech companies outweighed disappointing updates from other tech names. The tone quickly changed on Tuesday as higher than expected Q1 wage growth triggered inflation and interest rate anxiety. Ooh, you should probably take some, what do you take for anxiety? Hell, I forget. Where were we? Just as the Federal Open Market Committee kicked off its third meeting of the year. Each of the three major averages dropped more than 1.5% on the last trading day of April. When the Fed announced it was holding rates steady on Wednesday, stocks initially rallied on the news, but sellers got the upper hand late in the trading session, and prices ended the day slightly down. Excuse me. On Thursday, stocks trended higher as more companies reported upbeat Q1 results. Then on Friday, stocks pushed higher after the April jobs report indicated that unemployment had ticked up and the economy had slowed. The 175,000 jobs created in April represented slower growth than the over 300,000 added in March and less than the 240,000 economists expected. Some Fed watchers believe the news bolstered chances that the Fed may adjust rates sooner than later. I still doubt that. All right. Uncertain hurting. Markets hate uncertainty, so Fed Chair Jerome Powell attempted to clarify the Fed's stance on the outlook for interest rates at the close of the two-day meeting, determining what's next for interest rates in the context of stubborn inflation is no simple task. But Powell was as straightforward as possible. Really? Really? Was as straightforward as possible at the press conference. Quote, I think it's unlikely that the next policy rate move will be a hike, he said. I'd say it's unlikely, end quote. Personally, I'd still be raising rates. I mean, they'd be at like 6.5% right now. I mean, just to squish down that inflation. I mean, Paul Volcker had his faults, but he seemed to have done a good job. Granted, I was a little tight back then, 40 years ago when all this happened. But anyways, all right. Economic data coming out this week. Wednesday is the EIA petroleum report. Thursday, jobless claims and the EIA natural gas report and the Fed balance sheet. Friday's consumer sentiment and the Treasury statement. Also, companies reporting earnings this week, a little lighter on the docket. Monday is Vertex Pharmaceuticals. Tuesday is Walt Disney and Arista Networks. Wednesday is Uber Technologies, Airbnb, Shopify, and Emerson Electric. All right. Well, that is the news for the week. So, all right. Let's go ahead and move on over to the market recap and see what happened today. U.S. stocks rise on revived hopes for September Fed rate cut. See, they just have pounced on that. Oh, well, a little bad news. The Fed's going to cut rates. No, they're not. Again, Fed's not cutting rates until either the economy tanks or the stock market tanks, or both. I mean, again, they kind of move in tandem. So I think that's probably going to be the thing to look for is, when the economy and the markets start to sag, they're going to help out their friends on Wall Street with lower rates because that's always the prescription for that sort of thing. I don't think that's the right idea personally, but what do I know? I'm just a financial advisor. All righty. U.S. stocks saw gains on Monday, fueled by expectations of a Federal Reserve interest rate cut in September after the release of weaker than expected April jobs data. The report signaled a cooling labor market, easing concerns about wage-driven inflation. Traders are betting on a rate cut as early as September with a 44% probability, according to the FedWatch tool. Federal Reserve officials acknowledged the slowdown in job growth and hinted at potential rate cuts instead of hikes in upcoming remarks. Richmond Fed President Richard Barkin commented on restrictive policies, while New York Fed President John Williams expressed concerns about recent trade-related inflation. In international news, a Gaza ceasefire deal brokered by Egypt and Qatar faced uncertainty as Israel reportedly showed reluctance to accept a softened agreement, citing outcomes it had not agreed to. Yeah, personally, I don't care either way. I just don't want to fund it. Let the Israelis and the Palestinians fight it out. Personally, I'm more on the Palestinian side because the Israelis have just encroached on the Palestinians' territory over the last 40, 50 years, and no one seems to care. I mean, it wasn't the British government and the Balfour Declaration to give away that land in the first place 100 years ago, but there's a lot of moving parts here. It's not as simple as one's good, one's bad. So a lot of nuance. All right, where was I? During earnings season, Spirit Airlines saw an 11% decline due to wider than expected Q1 loss, linked to issues with with its Pratt & Whitney engines. Uber Technologies and Walt Disney were set to announce results later in the week. Warren Buffett's Berkshire Hathaway B reported a 40% increase in Q1 operating earnings. In the tech sector, Supermicro Computer and Micron Technology saw gains of more than 4%, driven by an upgrade from Baird, citing meaningful upside opportunities. That's in quotes. The summary captures key market movements and developments reflecting the sentiment driving stock gains and international negotiations. So that is the market for today. One more article here to cover comes from our friends over at First Trust, Mr. Brian Westbury, their chief economist. His article this week is The Fed Faithful. Let's see what he had to say. All right. The article discusses the current economic conditions and their implications for the Federal Reserve's monetary policy. Despite conflicting signals in the economy, the GDP growth rate is expected to be solid, with estimates ranging from 2.5 to 3.3% for the second quarter, exceeding the 20-year growth average of 2%. However, not all economic indicators are positive. The ISM Services Index showed contraction in April, with the business activity component at its lowest since the onset of COVID-19. Similarly, the ISM Manufacturing Index remained below 50 for the 17th consecutive month. The labor market also showed signs of weakness in April with slower job growth, wage growth, and fewer hours worked than expected. Non-farm payrolls increased by 175,000 below the consensus of 225. The article emphasizes a core measure of payrolls, excluding certain sectors, which rose by a modest 67,000 in April, indicating a tepid pace of job creation. Despite these developments, the Federal Reserve faces challenges in responding to higher inflation readings. Consumer prices rose 3.5% in the year ending in March, prompting concerns about justifying rate cuts. Again, why would you cut rates if inflation is still hot? You wouldn't. The Fed recently announced a slowdown in quantitative tightening, indicating a move towards loosening monetary policy to address inflation concerns. Why would you loosen the policy if inflation is still a problem? This decision reflects the Fed's belief that progress is being made on inflation, albeit slower than anticipated. Overall, the article expresses skepticism about the Fed's ability to effectively manage inflation without adversely impacting economic growth. It questions the stock market's lofty valuation relative to interest rates and profits, suggesting that investors may be relying heavily on Fed's intervention in response to economic weakness. That's very true. All right. There was actually one other thing I wanted to. Is this it? Let me see. Oh, yeah. One more thing I want to cover today. So this is, if you have any skepticism about the administration that runs our country, we're going to go ahead and listen to a couple of minutes of Jared Bernstein, who I looked up his Wikipedia and his bio. Doesn't really seem like he's he's got a lot of credentials and things, but I don't think he's all that bright. So let's take a minute and, actually, I got to turn this. Hang on a second. Stop, present, share. If you want to be able to hear it, I have to turn the sound on. All right, there we go. Share. All righty. So this is Jared Bernstein. We're going to listen to a couple of minutes of this Yahoo talking. So let's go. Let me turn up my volume so I can hear. Here we go.
Bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even borrow?
Well, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Really, you can't answer that question. That is shocking. And who is Jared Bernstein? Let's bring that up on the screen. Hang on, let me get this off here. So Jared Bernstein, let's bring up his Wikipedia page. And let me add that here. All right, so Jared Bernstein is an American economist who is the chair of the United States Council of Economic Advisors. He's a senior fellow at the Center on Budget and Policy Priorities from 2009 to 2011. Bernstein was the chief economist and economic advisor to Vice President Joe Biden in the Obama administration. And in 2008, Michael Deschier described Bernstein as a progressive and a strong advocate for workers. So this gentleman who has, he's got he has a master's in social work and a doctorate in social work also. So yeah, so this guy is one of the head honchos that handles our economic policy and things, and he can't explain that. I mean, I'm not a fan of modern monetary theory or MMT, anyways, but he cannot explain why we actually tax our citizens as opposed to just printing the money and spending it. I mean, I know the reason why is because you have to go through that process, so we just don't print and have this a massive just devaluing the currency like crazy. They go through this dog and pony show of creating a bond. The Fed prints the money. They give the money to the government, and then the Fed owns the bond. So it's really no different than selling bonds to the open market. But the Fed's doing it. They just print the money to give it to you, as opposed to you and I, where we take the money out of our bank, give it to the government as a loan. So, anyways, I mean, this dude was a musician through the 80s, and then got into the political realm in the 90s, and pretty much had been a government parasite ever since. So, anyways, just a little food for thought that everyone thinks that the government is made up of smart people. I served in the military. I can, and I lived next to NASA most of my life. I can guarantee they're not all that smart. I mean, some are very bright, but for the most part, they're just government lackeys who are collecting a paycheck and moving papers around a desk. So, anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. And if you could, also give me some thumbs up, like, share, subscribe, follows, and press that notification bell. All right. So all my contact information there. So if you do need to reach me, please reach out. Hope everyone has a wonderful evening, and I shall talk to you again next time. Adios.